This is market insight for the coming week of August 5th through the 9th. Let's get into this. So starting with our top-down approach as usual. Finally, we're starting to see the pullback that we've been expecting, we've been anticipating for quite a while now, right? And if you listen to the news, you look at CNN or NBC or Fox or whatever, all of a sudden, oh, we're about to have a big reaction. It's recession time. Things and criticism of the Fed that they started too late, blah, 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 blah. Ignore all of that. That has nothing to do with anything. Just focus, we focus on the technicals, and that's where we will do our best work. Adding in the news of the day and pundits' opinions are just going to get us going sideways and causing all kinds of problems. Let's do this, and let's talk about this in some detail now. Even though it's hard for me to see, I do want to do some details here. So last month we have shortening of the thrust and we have effort versus result, and then that triggers the monthly pullback. Let's go through that in a little bit of detail. So in June here, right, this is June right here, the market rallies up. Sorry about that. Yeah, no, that's June there. Okay, so the market rallies up to new highs, right, and closes pretty good, making good progress. And this is good progress. It's breaking the 53.33 level. This is an important level we're going to talk about more today. And the only hints of trouble is that there's slightly less volume as we push up, right? But also we're obviously overbought in the trend channel. The trend channel, we're way over the supply line. So those are the two negative indications. But overall, we have to say that June was pretty strong, right? We break out, we rally up, and we hold highs, right? So buyers were present. But then in July, look at what happens. First, we have shortening of the thrust in the length of the rally, in the length of the price bars, right? We see this by assessing the distance traveled from one way is from assessing the distance traveled from high to high. So in May here, we have a high, right? And we travel that distance, right? From high to high. So the June monthly high, from the June's high to high, then we see it gets shorter, right? It gets less. Let's look at this in good detail here. So we can calculate this if we wanted to, but it's really not necessary. We can really see it just by doing this. So we have all of that distance, and then the distance gets shorter. The thrust up shortens. This is shortening of the thrust, okay? So as I said, we can calculate it, but you should be able to see it. And so even though we're making new all-time highs in July, the distance traveled over the month was less than June's distance when it traveled over May's high, right? We got more thrust in June than we did in July. So this is thrust shortening, or shortening of the thrust. We can also see this in the closes, right? Probably even more clearly. In fact, it is more clear. We start off with the May close here, and we travel that distance in June, all that distance. Then look at what happens in July, right? From June to July close, we go only a very small distance, right? In fact, these closes are so close, they're nearly identical. So we can say that these closes are clustered or nearly clustered in here. So what does that mean? Well, what it means is that over the course of a whole month in July, there was hardly any net progress up, okay? That's what that means. Over all of July, we hardly make any progress. And note the volume, right? I'm sorry, the volume here, it's larger than the last couple of bars, right? So buyers are pushing up and pushing up. We know that with the volume to try to get higher prices. But as they do, we see they don't get very far on all that volume. And we can measure that by the relative highs and the relative closes. Neither measure shows good progress up. Both are showing shortening of the thrust. Think of the volume here as strong headwinds, right? We're in a jet or in a plane, we're going across the country, and it's strong headwinds here. And the buyers just don't have the energy to overcome or cut through those headwinds. So those headwinds are supply, right? And they're affecting the market. They're coming into the market and stopping the upward progress, causing shortening of the thrust. And naturally, the market begins to fall as we open the first couple of days of August, right? That's the August month, and it's low volume because we haven't had many days here. So let's go to the weekly and take a look and see what we can see there. Just erase here a bit, and there we go. So, and let's see with weekly tape reading how that monthly unfolded. We can see in the details on the weekly how buyers were unable to hold the new high prices and then started coming down. So we can see a solid rally from the first week of June. It's down in here a bit. We're pushing, this is the first week of June, right? We get that solid rally. Volume is strong. We push up, close over resistance, this 53.33 resistance. We close just over the top of it. Then the next week, more good solid volume, more good progress up, and even the third week we come up on we make good progress, right? But we continue up on the third week on less volume, right? And we're at the top of the trend channel, and so not a surprise to see volume pull off a little bit. Indicates that most likely that supply line there is going to hold, right? And so on the last week, we see the last week of June, we see the market come down on a slight pickup in volume, but the market's holding in there. We're not really giving up any gains. So buyers are still pretty strong. We see some selling come in, but buyers aren't giving up the goose, so to speak. They're holding gains there. And then on the first week of July, we push up again. July resumes the uptrend with new highs. Again, breaking resistance. That's important for us, right? That's a key indication that buyers have strength, right? So, and then after breaking resistance, we come up on the next week. We're again, we penetrate the supply line. We see a pickup in volume here, but we also see no good progress up, right? We see narrow range, and we see a close off of the highs. So let me just check my notes here. So, and we close off the highs, and we see a pickup in volume. So this is some effort to go up with some result, but the result suggests that sellers are checking the buying because we couldn't close firm. We couldn't close over resistance. Resistance is starting now to hold in here. And then the next week sees supply come in, right? And this is the key week right here. Right here, we see from the low here, on this leg of the rally, we see the largest down bar, the largest weekly down bar, on the largest weekly downside volume since this rally began. That's important to us, okay? It tells us that sellers are we're now seeing supply come in. And that's the, as I say, that's the largest down week on the largest downside volume since this leg of the week of the weekly began. This leg up began in mid-April, early May. And notice how easily, let's erase this for a sec. Notice how easily we erased all of last week's upside. You know, all the progress we made in the prior week, gone. We erased all of that this week, and we did so and we closed firm to the downside, and we did so on an increase in volume, and we broke support, right? So this is a form of a top reversal. We talked about that in some detail the last couple of weeks on the daily. This is just, we're just seeing it on the weekly. And we can look for a short entry when we see this kind of a configuration here. We can look for a short entry on the lower time frame, meaning the daily chart for a swing trade. And in a few moments, I'll show you that in a moment. But let's finish this up now first. So supply came in, and supply is now in control, assuming we get confirmation on the daily, and we did, and I'm going to show you that in a minute. And just like we talk about on the daily, we can read the transition from demand to supply on the weekly, as we've done here. Right? Demand's in control, and some supply demand tires out here, supply comes in, and now supply is in control. Same kind of thing. We always see, almost always see, that kind of a transition take place. It doesn't happen usually on a quick reversal, so to speak. So we have, and then we have more progress on strong volume over the remaining week of July and then into the first week of August. So, and I note that we're at key support at the 53.33 level. So how do we know that this is key support? Well, all the trading that happens. This is a weekly chart. Look, we've got 3 weeks of trading around that level, really 4 weeks of trading around that level here, and another few weeks of trading around that level here. So when we come back into that, just the virtue of all that trading that happened before, we know that this is an important level. It held it held the market over here after a few weeks. We reacted, we came down, we traded around it, we finally ground through it, kind of a grinding action that occurred here, right? So this is an important level. It's not just a single point where we get a single print down, you know, a weekly low or a daily low, but it's an area where we had lots and lots of trading earlier. So that should, you know, we would anticipate that support holding at least initially on the first foray into that area as we're getting here, as we got on Friday, right? So let's see. So we're at key support, and we know this is an important support. So let's take a look on the daily here. Check that out here on the daily. So here's, yeah. So let's talk a little bit about that first thing here, that where the weekly had this setup where we got the top reversal bar, the heavier bar down on increased volume, right? And then that set up a trade right here. Let's see if we can see that on the daily, okay? So on the daily, this is the week right here where we see that the supply came in on the weekly chart. So we want to look to the lower time frames first to confirm, and here the lower time frame is the daily. So we confirm that supply, and then we can look for a short entry, and we can see the supply on the daily. Wide spreads down, closing poor, volumes increasing, right? That's supply coming in. Negativity coming into the market. And I want to emphasize this. I really want to bring this home to you because it's so important. Please don't forget this. And what happens? We're breaking support. Okay? Wide spreads down, increase in volume, poor closes or closing firm to the downside, down on the lows, and breaking support. Okay, really important. This is what supply does. It creates, the widespread down, but the real key is to break support, right? To start pushing the market down to new lows. Then we know supply is in control. So then the next week on Monday, the market starts to hold a little bit, coming into, into this area over here to the left, and we start to see what? We see shortening of the thrust, right? On the daily chart. Even though it's closing down, firm to the downside, we're starting to see shortening of the thrust. And then that sparks a weak rally, go back up, and testing the resistance there. Now let's tape read these couple of bars here. Note that we start to hold and we start to rally. As we rally up, what's volume doing? Is it increasing? No, it's declining. It's diminishing. Are the spreads wide and closing firm? We get one firm close here, sort of. We get one firm close there, but these bars on the rally are not strong bars like the downside here, right? So we're seeing narrower ranges, lighter volume declining, and that big and, right? And we are unable to break that resistance, or to break back up to recover the support that we broke before. Okay, see how important this is? See how this kind of fits in with this recovery, or the flush and recovery? We could have maybe flushed down here, and then if we recovered this level, this 56.30 level right in here, if we had recovered that, then we would be looking for maybe new high prices, or at least coming back up and retesting, right? But we weren't able to do that. Why? Because sellers are in control and they refuse to let buyers push the market back up above the 56.30 level. And that was important. There's pocket resistance in here, right? That's important resistance in here. So all of that, the transition from supply to demand, and then when we see that occur, supply is in control on the higher time frame. We can confirm that on the smaller time frame with the spreads and the volume of the closes and the breaking or holding of support and resistance. Okay? And that helps us set those trades up. That's how I see this stuff. Not just in terms of, levels and what have you, and we're at resistance, so let's short here. So by the way, that magenta colored bar is a narrow range 6 bar, the NR6 day, the smallest range of the last 6 days. This is Toby Crable's work. It shows you, the market hesitates, has that little hook in here, and gives us an entry stop right above the highs there for a swing trade down, the target being 53.33, which gets down there eventually. So we see the initial conditions get set up on the higher time frame, and then the lower time frame confirms and gives the entry. Whether we're doing this on a weekly and daily, or an hourly and 15, or hourly and 5 minutes, the same thing. Oh, let's get to this week then. I wanted to just highlight that for you and kind of reinforce some of the things that we do and we look for in this, and just do it on a different time frame. So let's take a look and tape read here. So Monday, we're at significant resistance. This is the weekly supply line. Weekly demand line that's broken now, so should serve as resistance. We're at the daily supply line here. Excuse me. We are at horizontal resistance. We're at more horizontal resistance. There's a ton of resistance confluence in here. And not surprisingly, the market holds on that day on lighter volume, and doesn't give us an NR6 day, but gives us another one of those narrow range days Notice the clustering of closes. We rally up. We couldn't get through that resistance. We made no net new progress over the prior day. And so that sets up, Monday kind of set up initial conditions, a pullback, right? Not initial conditions, excuse me, but conditions for be vulnerable to a pullback the next couple of days, right? And the market does react on Tuesday here. Let's see again. Does react on Tuesday, but closes mid-range on a pickup in volume here after coming into the 54.32 level support. So buyers are present. We know that by the close. And our question then becomes, can buyers push up and start breaking and recovering resistance? Or will the resistance hold and sellers come back in and push price, try to force price lower? So Wednesday was an FOMC day, the Federal Open Market Committee day. And we started breaking resistance early, indicating that we were going to try to push prices up higher, and we did. And we pushed prices all the way up into that key level of 58.88, 58.85. We talked about that last week. Remember, we had noted that it was resistance here. And also, this is the start of the heavier volume coming in. Excuse me, heavier volume coming in. So a key level, right, for us. And the question became, could the buyers take it over the top of that? This is the key level of resistance there. And so we came up to that 58.88 level. And then we see the price holds that, backs off a bit, but still closes relatively good. However, the next day, after putting in a new high up there, we start coming hard down again, all the way back down to the 53.40. That's wrong. This is 53 level. Sorry, that is correct. And then even lower than that to 53.33, which is this heavy blue line here. So we come down into the halfway point and into important support. And by the way, Thursday was a bit of a surprise, right? We didn't anticipate such a big push down and then continuation down there. It looked like maybe we were going to try to maybe hold it 55.42 or a little bit lower in there. Didn't happen, right? We start breaking the supports, and that is a good, clean indication that sellers are in control. And so Thursday was a bit of a surprise. We're unable to hold the highs, and then that supply created a widespread down and closed poor. And then that supply continued on Friday, where we come into that 53.33 support level. And then we start to see buying coming in. So let's take a quick look at the major markets, and then I'll circle back around and we'll take a look at what we can anticipate for next week. So here we have all three markets, and we can see that they're all around important support. Now the Dow is clearly stronger, and I wanted to do a little detail on that just to highlight it for everybody, make sure we're all on the same song sheet, on the same page. So the Dow is in the middle. That's this one right here. And then the S&Ps are here, and the NASDAQ is here, okay? And it helps. We're looking at comparative strength and weakness here. And it's useful to do this with similar markets, right? So why do I say that the Dow is clearly stronger? Let's take a look. At A, in fact, the Dow on these couple of days was actually making a higher highs, new all-time highs, as the other two markets were either already reacting in the case of the NASDAQ or just going sideways and not able to make new highs in the case of the S&Ps. So at A, Dow was stronger, right? Then at B, we react down and then rally again. We react down into support and rally. And we do that with all three markets. But notice the rally on B with Dow is stronger, right? We come almost all the way up, back up to A. We don't even, and there's a little, let's call this A1 here. Now we'll call this A1 and A1. Just as a reference point, these are kind of insignificant levels, right? But you can see that neither the S&Ps nor the NAS was able to get over A1, and the Dow easily got over there and held above it for a few days. So at B, where it puts in, all markets put in a lower high, but the Dow puts in a higher lower high, if you will. But it's just showing more strong, it's just showing itself stronger than the other two markets, right? And then at C, erase this so we get a clearer picture here. At C, we come into important support at on the S&Ps. We come into important support. Actually, we go underneath of it, close underneath of it a bit, close underneath of it, excuse me, on the NASDAQ, and we hold above this. No, hang on a second. That's, yeah. So we're holding above here, above this support. I'm assuming that the support levels are really into here, right? As we look at this and we look at this, we're really looking at this. And we're holding up a little bit higher on C. So the whole point of this is to just give you a sense of Dow is stronger, right? And the NASDAQ is clearly the weakest. So we can watch the Dow early next week because the Dow is in a spring position, right? We have a swing low. It's got an ABC down, and we wouldn't use this ABC configuration. It would be A, B, and C down, right? So we have an ABC down. That's comes from Elliott wave theory, and it's a corrective wave, right? So this would be kind of like a bull flag, if you will, in traditional technical analysis. In Elliott wave, it would be a corrective wave so far. And in Wyckoff, the Wyckoff playbook, we'd be looking at a potential spring here. This level is 40, right here, it's 40, I should have written this in, 40,055, that's this level. If we start trading, if we push up and trade and start holding above that, then we're in a spring position, and that should pull the other markets up as well. So that's a way to use this, right? You could also use it as a way of saying, okay, the Dow is stronger. If I'm going to go long anytime next week, I probably want to go with the Dow. You can use it that way as well, sort of comparative strength and weakness. So let's look at the coming week and go back to the S&Ps, the daily, and let's look at the coming week and what's on tap here. So again, we've reached the halfway point on the daily. That's 53.42. We've reached this important level here that is, we know from both the monthly and the weekly, 53.33. This is a key level. Remember I said there was a lot of trading around that. Look at all the trading in here and in here and back over here. You know, lots and lots of trading. So this is a key level, right? So, and we're also at the halfway point, the normal pullback for the daily from the late April lows. So we can, and so if the down move ends here, you know, maybe we have another day or two of consolidation or a few days of consolidation, and then we resume higher up, you know, the Dow has that spring and so on and so forth. And we start breaking down the resistances. I'm sorry, and we start breaking down the resistance, then we're looking at higher prices, right? On the other hand, if we start breaking down the support, you know, we start closing underneath 53.33 here, then we're more likely into a higher time frame pullback, more like the weekly. or maybe even a monthly pullback, okay? So again, this is a useful way for us to use that halfway point in conjunction with higher time frames. Let's look at the details here on the daily. So Friday's low is 53.31 and 3/4. Let's just call it 53.30. This is our last level of support. If we start trading down below this, then we're likely to start trading lower, indicating that larger reaction, right? And so those levels would be 5,300 as a round number is the first support down. I would say then 52.75, kind of in the middle of this level in here, 52, and then 52.50. Let's call it 52.05, but 52.00. So that's what I'd be seeing as supports, and potentially, we're going lower than that. But for next week, that's what I'd be kind of thinking about. Now, so again, Friday's low is key. We start trading below that. First stop down would be 5,300, the round number, then 52.75, some congestion in here, and then a point of support down here at 5,200. And again, another round number, right? So that's to the downside. However, if we can hold now and we start pushing up, then we hold Friday's low, perhaps even on Monday. Let's erase here so we can see. Perhaps on Monday we flush underneath Friday's low 5, 6, 7 points, right? And then recover it, test it a couple of times, right? Test it once or twice. Then I'd be looking for that push up. And then, so where might that go? Well, we've got 54.32 here, and I would say actually a little bit higher along the lows in here, 50 to 50 in here, 54.40 to 54 be that first level of resistance, right? And then the market may just die there, and we might see another dip at that point. If we go higher, right here, I didn't write this in, but this is 54. To me, this is our line in the sand. Kind of sellers are in control below this, and buyers are in control above that. And really, there's probably, more of a zone in here between these two. But this is the first level, 54.73, right? It's a key level. Why? Because look at the volume that came in, right? This is supply that initiated the break of this. We've been trading around here for over a week, so there's support in here, and this is what caused the break of that support. So this becomes an important level. This is if we can get up over 54.40, 54.50 area, probably another 20, 25 points up into here to 54.73. Then see what happens. Can we get over the top of that? If we can, that's good news for the bulls, right? Then we're breaking this. You get the red line in here. We extend this line down, right? And we come up over the top of it and we hold. And we've broken, well, I changed the color there, but sorry. So we've overcome this level of resistance and the daily supply line. So now we're breaking resistance. Now I'm thinking, their prices, first level, first stop, 55.02, right in here would be the first. And then again, we may see a pullback and we may come back around and test 54 in here. But these levels are going to be important. 54.32, 50. Sorry, it's hard for me to see. 55.02, 54.73. These are key levels then. If we can get over those, then back up towards 56.60, maybe all the way up into the pocket, up in here to 56.30. That's a key level in there, right? 56.30. So just by kind of thinking through and looking at where the trading has happened, how things might unfold, where, you know, obvious levels of support and resistance are, where the trend lines are, where they're intersecting, and all of that, we can start to lay out, you know, a map, if you will, of the terrain for the coming week. And that's what I'm trying to do here for you. So let's see here. Let's see. So really the question is, we see some buying coming in. Can the buyers, you know, and by the way, the rally on Wednesday was a you know, a larger wave up, right? So we do see some demand in here. We see some evidence of demand both on Wednesday and on Friday's, you know, the afternoon close. There's some buying that went on there. Can the buyers do what they need to do? Well, we'll see. We don't know, and we're not going to try to predict. We don't have to predict to do well. We can just lay it out just like this, and then respond as we hit those levels on the way up or on the way down. So we'll see if buyers can put anything together for the coming week. Erase this. Take care, everybody. Bye-bye.